Let's crunch the numbers now with Marc Ostwald, Chief Economist and Global Strategist with ADM Investor Services International. Always good to see you, Marc. Now, that Eurozone GDP up 0.3%. How much can we read into these numbers?
Well, I think one needs to break it down. Yeah. The encouraging part was outside of France, there was a nice pickup and a positive contribution from exports. What is universally true, however, household expenditure in Germany was down, domestic consumption in France was down, domestic demand in Italy was also negative, there was a strong contributions in Germany from construction after a long period of being a real drag on the German economy. So there are encouraging signs in here, but the worrying part is that household consumption, probably still very much beleaguered by the cost of living pressures that there are, despite the fall in inflation, are definitely acting as a drag. The offset from the increase in exports is encouraging. I would imagine the bulk of that went to the US because US imports during the quarter were also very, very strong.
So you talk about some green shoots there from construction in particular, but you mentioned those concerns, particularly around the cost of living crisis. Is that the key concern remaining for European economies? What are the headwinds?
Yeah, I mean, well, I think the headwinds are basically wages are increasing and gradually catching up with inflation. But there is a general feeling that the economy doesn't have that much momentum. So, it's how Q2 looks after this. Is this a one-off after a period of very lackluster performance? Is it really very export dependent? I think that's really the key worry in a world of a lot of geopolitical tensions where export demand might suddenly tail off.
Marc, thank you for all of that. Stay with us because we've got more to quiz you on in just a moment.
Yes, absolutely. China's Politburo says it will step up support for the economy, which saw a slower rate of growth in April after a strong performance the previous month. The top decision-making body says it may use monetary and fiscal policies to boost capital markets and the property sector. It's also announced that the third plenary session of the 20th CPC Central Committee will take place in Beijing in July.
China's manufacturing and services sectors both grew this month, but more slowly than in March. Latest figures show that the Manufacturing Purchasing Managers Index, or PMI, fell from 50.8 to 50.4. The economy's returned to growth after months of contraction, although there was a brief boost after the pandemic.
All right, let's go back to Marc Ostwald, who is still with us. Hello again, Marc. So manufacturing activity grew slightly more than expected in April. What's behind that growth?
I think it's still the main drivers are very much the tech industry and anything to do with the energy transition. Those are definitely driving things. The loss of momentum is worrying. And particularly the setback in the services PMI down to 51.2 from 53.1. That had been boosted by some post-Lunar New Year activity. It shows that the momentum isn't that strong. And if, in effect, the message from the Politburo today is there needs to be more done. I think more encouragingly on that front, they seem to sound a note where they were saying we're going to need to be even more proactive in shoring up the housing market, sorting out the problems with the bad debts, and also ensuring that new construction gets a bit of a boost. And that, to me, is a positive sign, above all, because the property sector remains the key drag on the Chinese economy. As I've said many a time before, if one looked at it ex-property sector, which one can't really do, but actually growth hasn't been that bad, but because the property sector has been such a millstone, it's been unimpressive.
So is China out of the woods, or is there still some instability to come in your view?
I think there's instability because of the geopolitical tensions. They're always there as a threat in the background. But I think this note on the whole housing property sector is an important one, because that really does need to be dealt with even more proactively. And it's interest rates aren't going to make a difference to this. It's about the bad debts for the developers, getting those off their balance sheets so that they can actually act in an unencumbered way, and then also putting some ring fencing new construction so that it doesn't become beleaguered by the old bad debts in the property sector. And that is a good way of going about it. It's not unlike the RTC resolution in the US.
All right, thank you very much for chatting to us. That's Marc Ostwald, and he is Chief Economist with ADM Investor Services International.